When do investors in mining stocks get their expected leverage on high metal prices? Matt Geiger is managing partner at MJG Capital. Matt, welcome back to Kitco.
Good to be joining you, Michael. How are you?
Very good. Matt, tell us about precious metals. Gold is up roughly 20% year to date. The miners, as measured by the GDX, are up about 25%. The miners should be performing better. They are the riskier bet compared to the metals, correct, Matt?
Yeah, that's right. I think the GDX might be up closer to 22%. So it's barely keeping pace with the metal price increases that we've seen in gold and in copper as well. So whether you look at the GDX, GDXJ, or the XBM, base metal ETF, they've been struggling to keep pace with the underlying metal price increases, let alone providing leverage. And if you look to the juniors, I mean, we're at maybe 8%, 8.5% increase on the year as measured by the TSXV, which is an imperfect but a proxy nonetheless for the junior markets. So we're only seeing half of the returns that we've seen in the underlying metals between gold and copper. And look, in the short term, we can see these types of dislocations occur between metal prices and the underlying metals. But over any longer time horizon here, one of two things have to happen. Either metal prices have to snap lower, and primarily gold and copper, the two bellwether metals, or we'll see the miners play catch up, and the juniors included in that. And typically, we see miners over longer time periods exhibit up to 3x leverage to the underlying metal prices, and I've seen no evidence that has changed. So it's really a waiting game at the moment for investors.
A lot of people in this industry, they're hanging their hat by Q2. They're going to say that when the seniors publish these results with these several all-time highs with gold prices, there has been some margin compression due to inflation, but there really should be a lot of cash coming up, and that should finally catch some investor interest.
Yeah, I think so. I mean, there's a number of potential catalysts to start the kind of revenge of the miners here relative to metal prices. One of them you just mentioned. It's possible that it'll take a couple quarters of higher metal prices reflecting in the earnings of the major producers, bringing generalist interest into the space. Another option, we might be seeing this right now in the gold price, which is up, $100 over just the past 4 or 5 trading days. We may see another up leg in metal prices, whether that's gold and or copper. And that could really stir animal spirits all the way down to the junior end of the spectrum. Another potential catalyst could be increased deal making within the space. And just on Friday, we saw some serious rumors about Filo potentially being taken over by BHP and Lundin Mining. And just in the past couple of trading days, we've seen big strategic investments from Agnico Eagle and Foran, and then just today, Zijin into Montage Gold. So deal making is a potential catalyst. Amongst the juniors, it could just be a major discovery, a world-class discovery. Sometimes it's all that takes to get speculators streaming into the space, and that can happen really quickly. And then I'll just note another potential catalyst, and this was argued well by Brian London at Rick Rule's recent conference in Boca Raton, that we aren't going to see the major move in the miners until that first Fed rate cut. So I think these are all compelling arguments. Honestly, I'm in the fortunate position where we're investing over long enough time horizons where I'm not too worried what the catalyst is. I know that if metal prices stay where they are or continue their ascent higher, it's coming in one form or another. So I'll be watching, but we'll be patient.
Let's switch to that other metal that everybody's talking about, Matt, and that, of course, is copper. In your recent partnership note from July, you note that your copper holdings are at 36%. What's the bull case for copper, Matt?
Sure. I think the first thing to note here, and this is, this is how we invest at MJG. Every single one of our copper investments, and we have 6 or 7 of them within the portfolio right now, have been made for company-specific reasons. So I'm positively inclined towards the copper price over the coming 3 to 5 years, maybe even up to a decade. But for each of our investments, I think even were the copper price to stay flat at $4.50 in perpetuity, there are company-specific catalysts where if they go to plan, that could be through the drill bit, that could be success on the permitting front, that could be future M&A activity, where even with flat copper prices, there's the opportunity for significant price increases amongst these specific investments. With that said, I think the outlook for copper is very compelling. Obviously, on the demand side, it's the backbone of this multi-decade trend that's underway as we transition as much as we can away from fossil fuels. And then within that, copper has very little substitutability compared to your typical metal. But I'm more excited about the supply side of the equation, where from current levels, the copper price would have to rise at least by a third before we're anywhere near the incentive price to bring the next generation of copper deposits online. So I'm thinking $5.50 or $6 is probably the level we're looking at. And Brian Dalton from Altius Minerals, a wise and seasoned mineral veteran, has noted in previous cycles, sometimes we'll need to see the metal price increase to up to 2x what the incentive price is before the big boys really get a go on in terms of building the next generation of projects. And then once that panic button is pressed, we're then talking about a 4, 5, 6-year lag period between breaking ground on these mega projects and them actually going into production. These are extremely complex, technically difficult, expensive projects to build that are fraught with risk. This is far different than building a medium-sized gold mine that could go into production in a 12 to 18-month period. So I think that should be noted. And then just very quickly, from an investment perspective, especially amongst the juniors, I just love how this is a seller's market. There is so much demand for copper right now, both between the mega miners, the BHPs, the Vales, the Rio Tintos of the world, to copper-focused names, the Freeports. I include Teck in this category. I'd include Lundin, to sovereign wealth funds, and then very notably, the major gold producers. Barrick hasn't been shy in expressing its interest in copper. Newmont hasn't, as highlighted by its acquisition of Newcrest relatively recently. And then most recently, Agnico Eagle's investment into Foran Mining. So there's a huge host of potential buyers. If as a junior, you make a discovery of significance, or you have a later stage development project of significance. So I think it's a great time to have one's hand on a significant copper asset, really regardless of the stage.
Let's swing to looking at geopolitical. Why'd you increase your exposure in Brazil?
Yeah, so our exposure to Brazil actually comes from only two different positions. And I should note more generally, within any jurisdiction, there are places where you can develop and potentially build and operate successfully a mine, and there are places where it's entirely out of bounds. And so our two positions with Brazil exposure are Bravo Mining and Lar Exploration, both of which I wrote about in our most recent investor letter. And they're located right in the heart of the Carajás Mineral District. So if you're in Brazil, this is the prime place to be. It's right in the backyard where Vale grew up. There's significant amount of skilled labor available, service and technical providers, and a tremendously rich mineral endowment. So this is one of the places in Brazil that you want to be. It's not the only one, but it's at the top of the list in my view. I'd say with that caveat where you don't want to go anywhere within Brazil, of course, what I like about the country more generally is the rich mineral endowment. You have projects from gold to iron ore all the way to critical minerals. It really covers the whole gamut. The country has a long mining history, which is in stark contrast to other South American countries like Ecuador. Grid is 85% renewable, with 55% of that coming from hydroelectricity. So it's dependable and cheap power. And also there's the potential for critical minerals in particular that are produced from Brazil to be sold at a premium because they're not being generated by the burning of diesel or coal or other fossil fuels. And then the final point is I think Brazil has managed the relationship pretty well with both the US and China. So if you're developing a mineral project in Brazil with the goal to eventually sell it to a big player, neither China nor parties from North America or the Western world are off limits. So I think it's a good place to be more generally.
Matt, question on macro right now. Just what are you keeping an eye on? You mentioned previous in the conversation, Brian Lundin talking about the potential rate cuts and how that could, how would you say, jumpstart things happening with the mining sector. And of course, we have the election coming up in November.
Sure. Well, obviously the U.S. election is extremely topical right now, and it's looking more and more likely over the events of the past few weeks that Trump will be coming in for a second term in the White House. I think from a broader perspective, that's likely to be more inflationary, both in the U.S. and potentially globally, as he implements across-the-board rate cuts, across-the-board tax tariffs, even if they are watered down from what has been proposed, that's going to be inherently inflationary, as will his proposed corporate tax cuts from further levels from where he cut in his previous term. So I think it's also worth noting that Trump added a full third to the U.S. national debt in his first term, whereas Biden, by the end of his term, will likely be in the low teens in terms of the percentage basis of increase in the U.S. debt. So that would probably be modestly positive for gold prices going forward. I would say on the mining front, Trump should be helpful on the permitting front. I think there's no two ways about it. There are multiple high-profile and somewhat controversial projects that would benefit from a Trump presidency. One example would be the Ambler Copper District up in Alaska, which somewhat surprisingly saw its road denied or at least delayed by the Biden administration. And maybe, and this is going out on a limb a little bit, but maybe under a Trump presidency, we could actually see the ball get rolling on Rosemont, which is one of the top undeveloped copper deposits in the world that's been in permitting limbo here for close to 25 years. And moving down the spectrum to exploration stage companies, I've heard anecdotally from companies operating in the Western United States that the timelines in terms of receiving permits from the BLM have been quite lengthened over the past year or two. So we could see quicker turnaround times from the BLM to the benefit of those exploring and developing projects in the United States. One area I'm uncertain on is the economic support provided by the Inflation Reduction Act put into place by Biden. There's significant money in store for development stage projects, particularly focused on critical minerals. The money has been slow in rolling out, but it's there. And so it's interesting to me whether Trump sticks with at least this portion of the IRA, or whether out of spite or antipathy to Biden, we see that wiped out as well. So that's probably going to be neutral to modestly negative, depending on his decision making there. But I just say more generally for the United States, we're 25% exposed to the U.S., but each of our investments have been handpicked for companies specific factors, and none of them are broad bets on a political outcome. So, of course, I'll be following developments closely, but as of now, I'm not expecting to make any dramatic moves one way or another, regardless of who occupies the White House come next January.
Question about people, Matt. There's close to 1,000 juniors that are listed on the TSXV that you mentioned earlier. One of the key ingredients for these projects having a successful outcome is leadership. How do you assess people?
Yeah, so that is by far the most important investment criteria for the MJG partnership. It's the very first step that I take when evaluating a new potential investment. And most of the time, companies will not make it past that very first step. And I won't go into the project. I won't go into the company's structure. I won't go into the valuation. I think it really starts and ends with people in this space. One of the best ways to select for management teams that are going to do well for you as an investor is to stick with teams that have made money for you or those within your network in previous ventures. So I'm very much into backing folks that have done well for the fund previously. However, of course, we'll look at new opportunities. And when there's an opportunity with a team that I don't know so well, what I look for is, firstly, are they qualified for the task at hand? Whether they're exploring for gold in Nevada or developing a graphite mine in Brazil, have they been previously successful in this endeavor? And if not, what do they have to offer that makes me think that they could? Second question I ask is, are they incentivized and are they well aligned for me as an investor? How much of the company do they own? How much skin in the game do they have? Do they have high double-digit ownership, or are they in the low single digits? How do they get their shares? Were they a bunch of penny shares that they received at the company's formation, or have they acquired their ownership through open market purchases or participating in placements amongst their investors? Where's the share price relative to their cost basis? What's their cost basis? Is the share price 10x above their cost basis, or is the share price roughly, at or even below where they put their money in? And then I'll go through a list of 25 red flags, a checklist of sorts, and I won't go through them in detail on this call, but they were outlined in the most recent MJG investor letter put out in January. And this checklist is meant to avoid teams that are either in it for personal enrichment, have warped incentives, are distracted or have lost faith in the task at hand, or meant to pick up characteristics of a lifestyle company. So I would say firmly that the single biggest determinant to success, especially investing amongst the juniors, is to back the right people.
Lastly, Matt, what's your favorite idea for playing the resource sector right now?
Well, rather than throwing out a stock pick or so, I would just say more generally, it's important to just stay in the game, understand the inherent volatility that comes from investing in this space, and understand where we are within the cycle. We've just gone through a decade plus of underinvestment in exploration, development, and mine building. And we're just seeing that pick up again, but these are long cycles that are just going. And then look at the relative valuations of commodities to other asset classes. There was some good data out from Bank of America recently showing that the relative valuations from tech to commodities hasn't been this out of step since at the very peak of the dot-com boom. And of course, we know what followed after that, which was a 10-year bull market, driven by the Chinese commodity super cycle between 2002 and 2011. So I think we're very well poised here. And I think fortunes will be made over the coming 5 or 10 years, but only to those with the right temperament to stick with it through thick or thin. I think it's quite possible we see a broader market dislocation in the coming couple years that will likely shake folks out of commodity and mining focused names too soon. So for those with the temperament and the ability to think over 5 to 10 year time horizons, the opportunity here is simply tremendous.
Thank you, Matt.
Appreciate it, Michael. It's good joining you.
I hope our viewers stick with Kitco Mining. Goldman Sachs called copper the new oil. I want to tell viewers that we are going to be featuring our Kitco a Copper Masters panel, featuring mining tycoon Robert Friedland and Freeport-McMoRan CEO Kathleen Quirk. The live event will be running on Kitco Mining on August 22nd. We hope to see you there.